Hi everyone, welcome back to my channel. Today's topic is on the bear market. So I'll be sharing tips on how to survive the bear market. So if you didn't know, we are in a bear market. Okay, so later I'll also share the definition of what is a bear market, and then what you should do, and then how is your mindset like when you are faced with a bear market. Okay, so let's go. Okay, so like I mentioned, I'll be sharing tips on how to survive the bear market, and will we actually survive it? The short answer is yes, because judging from history, we will always survive the bear market, and there's been so many bear markets in history lah. Okay, so first I'll be sharing what exactly is a bear market. Are we in a bear market? Okay, how to survive a bear market, and then using history, and then looking at our current situation, whether is history applicable, and then what can we do in a bear market, and then when exactly does a bear market end? Okay. So what is a bear market? Okay, a bear market definition is a decline of 20% or more of a major stock market index. Okay, so a few of the stock market index has already declined by 20%. Okay, so like this definition has mentioned, a bear market is the opposite of a bull market lah. So marked by 20%. 20% is the cut off for bear market. Okay. So on average, bear markets occur every 3 to 3.5 years. So bear markets are normal and usually lasting for several months. This is not the first bear market, obviously. Okay, so what is a bear market? Usually, a bear market is signaled by these following characteristics: stock market decline, economic decline, negative sentiments. Investors are pessimistic about stock markets. Then want to go into safer things like a fixed deposit, that kind of thing. Okay. Then bear markets is a bear market is more sustained than typical drops in the stock market lah. Okay, so to be in a bear market, the decline has to be at least 2 months. I believe our bear market has already more than 2 months. Okay, so bear markets last for about 10 months on average. We are about more than 10 months currently, I think. Okay, so if you look at to date, I'll be using this SPY and hey, did I get this? Oh yeah, so SPY and Dow Jones index. Okay, so both, right? If you can see, this at the start of the year lah. So January until now, it was currently it really went up a bit. So maybe we are already starting towards the bull market. Nobody knows. Okay, but at the bottom here, we are down 25%. So definitely is a bear market here already, and the bear market started someplace in December or January. Okay. Then same for Dow Jones. So Dow Jones 21% down at this bottom if you actually calculate. Okay. So a look at history on the bear market. Okay, so there has been 28 bear markets since 1928. The average decline was about 35%. In fact, we didn't even decline 35% yet. So it could be like the bear market hasn't ended, but it's up to you to interpret. Anyway, bear markets are always good to for you to stock up on the cheap stocks lah. Okay, yeah. So if you look through, these are all the bear markets throughout the years, the 28 bear markets, and then I want you guys to focus at these few bear markets. Recently the bear markets have been quite long. I mean short lah actually. You look at the more recent one, is shorter, and you look at the a bit further one, and it's quite long. So I'm not sure whether we are in the long one or the short one. Okay, yeah. So the good news about bear market is, while we don't know how long this market slump will last, we know that things will definitely get better lah from according to history. So every single bear market in history has eventually given way to a bull market. Okay, so in fact, if you look at this chart, right, so we have gone through 2000 to 2022, right? Yeah, so technically we have went through 5 bear market, yet the market has performed 145%, up by more than 145%, even though there were 5 bear markets. Okay, so the stocks will always go up lah, even though now it's a bear market. Okay, then so according to history, also not every single bear market will lead to recession. So you need to take a look at what will lead to recession. Okay, so I think recession has started for this bear market. So looking back at past history, right, previously when there was a recession, it was this one is quite similar to ours. I think like a rapid rise in interest rates by the Fed, and then unemployment went up. Then this one also quite similar. They are 1981. So Fed raised interest rate to fight skyrocketing inflation, okay, leading to recession. So it's similar to our current situation. And then they have, I mean, we are now in 2022 and we have recovered from this 1982 thing. So likely we will recover from it again, okay. Yeah, so I also did research on like let's say if you actually put your money in the S&P 500 compared to you put your money into the federal funds effective rate lah. So if you put in 12k a year into your investment, right, I only got the data from 1994 onwards lah. So 1994 onwards, you put in 12k a year, you put into this like say federal funds fixed D or something, okay. So these are the rates lah, for all the years from 1994 all the way to 2021. Okay, so you can see the returns lah. So at the end, if you totally put in fixed D, right, at the end you only get 422k with the same amount of money. Okay, whereas if you put it into the S&P 500, right, these are using SPY annual returns. Okay, so if you put in the SPY, you will have 1.9 million versus 400k. Okay, so definitely putting your money into fixed D or like bonds for long term, right, it's not going to do good for you lah. I mean, unless you are very near retirement, then maybe you should consider putting into you can see like here in 1994 interest rate was quite high, around like now like 4.2 whatever, so 6% even. So in that case, it only lasted for how many years? It didn't last all the way, right? So definitely putting your money in bonds it's not a long-term plan lah. And not saying bonds shouldn't be part of your portfolio, but it's like it shouldn't be a bulk of your portfolio if you're still quite young lah. Yeah. Okay, so so if you actually focus on these few bear markets, so even though with all the 5 bear markets during this period 1994, right, all the way until 2021, you can see there's 5 bear markets. So it didn't really affect the returns of SPY. SPY still give you pretty good returns lah. So you should always stay invested during a bear market. Okay, so what can we do to survive a bear market? Nobody can control how long a bear market lasts, but there are steps you can take to protect your money lah. So avoid withdrawing your investments. Okay, market downturns are one of the worst times to sell your investments. So if you went in during the peak and then you sell now, definitely you're in a loss lah. Yeah, so you're selling your stocks when it's the lowest. I mean, if you're investing in ETFs, then also ETFs when they are lowest lah. Then locking in those losses, and then I know it's not easy. I mean, seeing the losses and the paper losses or whatever is always a tough thing to do lah. But you should always avoid withdrawing your money. Keep your mental health right. Okay. Also, what you should do is always keep a fully stocked emergency fund. So if you have at least 3 to 6 months worth of savings, then you can avoid tapping on your investments lah. So yeah. Okay, also choose investments wisely. Like I mentioned, I don't really like to invest in specific stocks because specific stocks can really go to zero. Whereas if you're investing in like the SPY S&P 500, okay, so the top 500 stocks keep changing. It's not going to be like one stock in the S&P 500 is not profitable. It's not going to pull down the entire S&P 500. Okay, and even if this is not profitable, one day you'll be out of the S&P 500 and then a better stock will go inside it. Okay, so that's why I prefer index funds compared to like stocks lah. Okay, so filling your portfolio with lousy stocks also will make you not survive the bear market lah. Yeah. Okay, so how to survive the this one is my own portfolio. It's been going down, but then I'm still holding up. I'm not going to withdraw it because this is for my long-term investment. It's for my retirement, and this is not going to decline. It's just going to keep. I'm going to keep adding to it. I'm not going to withdraw a single cent. This is for my retirement. Okay. So what else can you do to survive bear markets? Rely on low-cost brokers, and then if you are doing some trading, you can enjoy some charting promotion from TradingView. Okay, so this is for if you want to time your investments or you're doing some trading, then you can make full use of this kind of promotion. This promotion only once a year, Black Friday sale. Okay, so normal price for their premium plan, right, is $719 USD for 13 months. Now it's only $288. Okay, so if you actually use my promo code, which I'm going to put my link down below, and then you're a new user to TradingView, right, you can get a $30 discount off this 288 as well. So it's a USD 30 off. So it's a 258 USD if you're going for premium plan. If you're going for pro plan, it's going to be even cheaper. Yeah, so personally I'm on the premium plan. So yeah, please make full use of this kind of promotions while they are around. And then this will be ending in like 4 days. Yeah, so take note. Okay, so like I mentioned, now it's definitely a good time for long-term investors, not even just traders lah. So investing pros will tell you to stop, not to do any changes to your portfolio strategies based on expectation of short-term gains, because these are supposed to be for your long-term investments. Okay, so yeah. Okay, so when does a bear market actually end? So you just watch for 20% up from its low. So currently you can see the low already. And then just now, if you look carefully at this graph, right, you can see now it was 25% down at the bottom, but then now it's only down 17%. So it has already recovered 8% from the bottom. So this one, if you look at it, right, 21% down. This one now is only 7% down. So it has already recovered like how many percent? 14% already. So if you actually try to time the market right now, then you invest, right, you will lose out on 14% gains or 8% gains here. Okay, so that technically you should still always add to your investments even in a bear market or whatever. Just add to your investments every month or whatever. Okay, so when does a bear market end? I already mentioned once it gains 20% from its low. Okay, so half, like what I mentioned just now, half of the S&P index strongest days in the last 20 years occurred during the bear market. So the recovery is always during the bear market. So if you actually don't invest, then you wait for the bull market, then you invest, then obviously you're losing out a lot of gains lah. Yeah. Okay, so like I mentioned, bear market does not necessarily indicate recession. And then assuming if a 50-year investment horizon is normal to have bear markets, you can expect to live through about 14 bear markets. So this, I mean, if you're probably like my age and you just started investing, this is probably your first bear market and then you're feeling like shit about it. But yeah, you will experience it 13 times more. So make sure you get your mindset right, okay? So it's just a temporary part of the process. Bear markets are painful and overall, markets are still positive majority of the time. Okay? So bear markets are only, out of 92 years, bear markets only comprise about 20 years, okay? So it's always going to be painful some parts of your investment journey, but keep in mind the end goal, okay? Yeah, so that's all for today. Okay, so that's the end of today's video. Hope you have learned something new about staying invested. Okay, so if you guys want to start investing, do remember to use Webull. I will leave my referral code down below as well. So I've explained in another video why Webull is quite a good platform to use for your investments. Okay, so that's all for today. Thank you everyone. Please help to like and subscribe. Bye bye.